Hi, I'm Rushabh Shah, founder and CEO of Bolstart. This video is typically for founders who are ready to pitch to angel investors. We will quickly get started with basics. Do you like it when video buffers or maybe a person on live Zoom call lags? Your answer should be no. But if you want investors to like your pitch, make sure you have a good internet connection. Do an AV test of the system before getting on a Zoom call in the practice session with our venture analyst. He will share some more tips if needed. Pitch decks usually have different font styles and colors. For them to get a complete picture of your company, make sure you're presenting in a full screen mode. Now let's talk about your strategy. At Bolstart, we always believe in live pitching, which means investors are there to know about your company in brief and ask you as many questions as they can. So make sure your pitch is short. Don't pitch them more than 12 minutes. Investors are on the live pitch session for knowing about your company and not for a lecture. They want to get to know you. So the 30 minutes given to you should be split this way. 12 minutes for you to quick pitch and 18 minutes for them to ask you as many questions as they want. Keep your answers as short as possible. There are a lot of investors, so make sure you have enough time to resolve everyone's query and generate their interest. Now that the basics are taken care of, let's make sure your pitching is amazing. Investors like to know product or service first. Founders often make the mistake of over glorifying the problem and spend too little time talking about the product. Don't bore the investors. Well, don't get me wrong, right? They care about the problem, but they are more interested in the product that you have built. Show them that product. And the most important and common mistakes founder make is talking about the features. Instead, talk about the product in general. Don't focus on the features or the details. There will be a better time for that in future. At Bolstart, you are pitching to angels and not to VCs. VCs are more structured, more analytical, and more institutional. Angels are people like you and I. So it is very important to know how to pitch to whom. VCs will love a kick-ass team, but angels bet on the business first and then the founders. Ask any angel to invest into a kick-ass team without revenue. They will definitely say a no. Look, everyone loves a kick-ass founder, right? But different stage investors have different priorities. When you are pitching to investors, talk more about the company. When it comes to market opportunity slide, explain the market size as briefly as you can. VCs love to look at market size and opportunity because that is where they get the interest and understand of future potential of returns. If you really need to emphasize on market opportunity, save it for the ITH, that is second meeting with our investors. By saying, I would love to tell you how big the market is and the opportunity is for multifold returns. Let's get on a second call. Angel investors love to hear numbers such as revenue traction, profit, both EBITDA and PAT. They are interested in knowing how to make money or how you make money. Towards the end, a lot of founders mention the ask, but not the duration. For example, you can say you need 1.5 crores for a duration of let's say 18 months. Also make sure what investors get in return. That is how much equity you are going to give them, what they are looking for. What is the valuation? How did you arrive at that valuation? And finally, explain where you will use these funds. Now let's talk about pitch, or let's talk about how to pitch. One common mistake founders make is multiple founders pitching. It disturbs the complete flow of information and the tone. It is unnecessary. Remember, the end goal is to generate interest and close the deal. It does not matter if only one founder is talking. A founder should not feel FOMO if only one of them is pitching. This is business. All founders will get in the limelight on the investor town hall. That is a second meeting with Bolstart investors. It should always be one founder pitching and answering the questions of investors. If answers are beyond the scope of one founder, then another one can jump in and save the day. Pitch sessions switching between founders can cause delays in online ecosystem. It can cause AV issues like echo or investors' attention switching from one founder to another. And this leads to distraction. Avoid that mistake. When answering investor questions, make sure your answers are to the point. Avoid storytelling and lingering around the bush. Investors love founders who give straight answers. And just some final notes, okay? Look, pitch call is to generate interest of angel investors. You will get on a second call with the interested investors. But you might be thinking, Bolstart, how do you guys collect investor interest? Well, we collect investor interest in poll questions on Zoom live session and in our offline community as well. After the pitch, while we are collecting interest, you will be given 30 seconds to share an ending remark. Prepare that. give them hope and build interest. Finally, wear formals to the pitch session. Tidy up and show some professionalism. Angels will love you guys.